Hello and welcome to April's Asset Intelligence Market Update. As the days get longer, the trees blossom and the sun starts to make its presence known, a very welcome financial side effect beckons, the chance to turn the thermostat down. After a challenging start to 2022, March proved to be a much more fruitful month for investors, perhaps against the expectations of many given the terrible invasion of Ukraine and the added challenges that has brought about. But the old market adage of sell the rumour, buy the fact has once again proved to be insightful. The global stock market index returned 5.1% in March, going a long way to making up the decline seen in the first 2 months of the year. The US performed particularly strongly, returning 6.8% as investors looked favourably on the powerhouse economy's distance, literally and economically, from the situation in Ukraine. Still, even European stocks staged a late surge as investors reacted to tentative signs of progress in the peace talks between Putin's and Zelensky's officials. The market returned 5% in March. Closer to home, the FTSE All-Share returned 3.2% as the market continued to benefit from its strong contingent of value stocks and sectors like banks and energy companies. Even if these aren't always the most fashionable areas, they tend to perform relatively well during periods of higher rates and inflation, clearly valuable traits given current conditions. However, Asian and emerging markets were less successful. China returned -7.3% as key cities re-entered strict lockdowns to combat fresh outbreaks of the Omicron variant. Indeed, the sustainability and the desirability of the country's much vaunted zero COVID policy is now under renewed scrutiny. And finally, Japan. Whereas many nations have begun to tighten monetary policy, the Bank of Japan is still committed to keeping interest rates extremely low. As savers can now earn higher interest elsewhere, the yen has become less attractive to hold, causing it to fall in value. So even though Japan's market rose strongly, the currency effect was enough to see overall returns for sterling investors completely flat on the month. So although there were some pockets of weakness, overall the picture from global shares was healthy in March. Yet one asset class for which the month did not bring any respite was fixed interest. As inflation continued to rise almost everywhere, the global bond index returned -2.2% on the month, with sterling bonds faring even worse. However, I'm pleased to say that the Asset Intelligence Defensive Fund outperformed the market. This has been thanks to the managers of the underlying vehicles taking steps to mitigate the negative effects of rising inflation and rates. In fact, thanks to these actions, at the time of recording, the fund's performance sits within the top quarter of its peer group during 2022 so far. That's all from me this month. Thanks for watching and feel free to like, comment, share and subscribe. And enjoy the brighter days ahead, hopefully in all senses of the word.